Hey guys, welcome back again. So here for the poll, the results, the winners are ADA first, and then Bitcoin Cash, and then NEO. These are the top three winners. We had 146 votes in 2 days, so I'm going to be doing technical analysis in this. I will not be doing Bitcoin Cash because I just did a video this morning talking about possible targets to buy the dip. So really, there's absolutely nothing else I can say. I was as specific as possible. So if you need to know about Bitcoin Cash, go watch my video from today, this morning. You can find it on the website or on YouTube. But I'm going to be doing ADA and NEO, and I'm going to be doing versus the US dollar and also versus Bitcoin, because some people, the markets are still kind of, getting out of a bear market, like kind of recovering, but still Bitcoin still going sideways. It's still not clear with Bitcoin, so I think it's best to chart versus both US dollar and Bitcoin. If Bitcoin turns bullish and it goes full on bullish, I'm gonna start charting either versus Bitcoin or versus Bitcoin Cash. I'm not gonna be using the US dollar. If the crypto markets as a whole go bullish, including Bitcoin, I'm going to be charting versus Bitcoin or versus Bitcoin Cash. I'm not going to be using the dollar anymore. But for the time being, since Bitcoin is not clear yet, I'm going to use both. So I'm going to do NEO US dollar, then I will do NEO versus Bitcoin, then I will do Cardano versus the dollar, and then Cardano versus Bitcoin. But before I start, let me show you here. All of these charts have something in common. Not all of them, sorry. All except for one. They have corrected minimum 80%. Well, this one's 77.5, but this is we can call this 80% correction. This is NEO versus the dollar. ADA, Cardano versus the dollar, from top to bottom, it corrected 91%. And Cardano versus Bitcoin, from top to the bottom here, 82%. So they all corrected. So it's very, very likely all these charts have seen the bottom already, and now they're gonna go into a bull market. They started already a bull market or a sideways market at the very least. But I think it's very, 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 very likely this was the bottom, except for a NEO versus Bitcoin. This one has only corrected 50%, around that 56%. So this one, I'm not completely, how can I say this? It's not like I'm super bullish in the other ones. It's not like I think they're gonna start pumping like crazy, but at least I think they saw the bottom. I don't think they're gonna do any more lower lows. I think they're gonna, actually, I think the probability is that they will uptrend from here, but in the worst case scenario, I think they will go sideways and they will not touch this bottom again. They will do higher lows from here, with the exception of NEO versus Bitcoin. So I wanted to point out this before I start, because this analysis is going to be very, very simple. I am sure most people who watch my videos, they are usually in this situation. They either bought high and they're holding their bags during the bear market because they're used to buying dips, and they used to this strategy of buying dips to work very well. This strategy works very well in bull markets, but they didn't know this doesn't work in bear markets. So since there's all this hype and and all this craziness on social media, everybody calling and screaming buy dips, most people who watches my videos, I know they have been buying the dips all the way up. They did very, very well, but then they continued to do it in the way down, and now they are in losses, so they are holding their bags. Or other group of people that watches my videos usually is people that's waiting for an entry to just buy and hold it for the swing. It's not that much for day trading. It's not, people usually don't want to enter a position and then exit it very quick for a quick profit. People usually wants to, you know, we are lazy, and including me, like it's so much easier to just buy and forget, right? So that's what this video is going to be about. I'm not going to be giving very specific targets for day trading or for short-term trades, but more for, you know, when is the time to enter, or how I see the direction of these markets right now. And the direction is what I said. I think this touched the bottom already. I don't think we're going to see these low prices again. The moving averages are about to cross bullish, so this is the main signal to enter. However, this is likely to go lower than moving average. If you want to get a specific to get your best entry possible, you need to use the Fibonacci retracement tool from the bottom to the top of this last leg here, which seems to be reversing, but we don't even know if it's going to reverse here. I think it will reverse here. I think it's reversing already, but it could just be going sideways and then break out again. You just never know, right? But assuming it's reversing, where this can reverse to. So, and here you have the Fibonacci levels and the support and resistance levels. I usually bet for the 50%. So 50% is exactly at 64.5 dollars per NEO. So 64.5, I would say, is the level where this is going to reverse to, and then you could either, you know, increase your position by a little bit, or do nothing and only wait for it to bounce clearly. You wait, you know, any of these lines can be the support where the price is going to bounce. Any of these lines. I don't have a crystal ball, and no one really knows. We're not here to read the future. We don't know the future. We need to go with the probabilities, and probability says any of these lines, usually the 38.2, the 50, and the 61.8 are the most common ones, these three here. So I would advise you to draw these lines in your chart. Go to your own chart, draw these Fibonacci lines from bottom to top, and get these lines on your chart so you can monitor when, you know, when I'm not here, for example, and then you can see if it bounces at the 38.2, and you can see a clear bounce, not just some, you know, rejection that you see the candle and then it's forming a bullish wick and you buy out of FOMO because you see there's a lot of people buying there. No, you wait for at least one or two more candles. At the very least, go to the 4 hours. Don't go smaller than that. Don't try to, you know, don't buy based on FOMO. Look, this is reversing. This is gonna fall. I mean, very, very likely. So my minimum entry, or what I would consider entering, would be minimum at the 50% retracement, and the price is 61.56. It says here, you can see it. However, if I don't see a clear bounce, maybe I would not buy it and let it do, and I would only, you know, buy in any of these lines, but when I can see already the price bouncing, showing at least one or two green candles on the 4-hour chart. Yes, you are going to miss the bottom, but so what? The intention is to buy it and hold it for the swing. And if this is going to be an upswing, there's going to be 2 or 3 months of upside. So you don't need to get it, you know, at the exact dollar. But these are the lines to watch for the bounce and for the potential dip to watch. Of course, nothing is 100% predictable. This can go down and this can go down to zero. You know, for all we know, I don't think it's probable. The chart doesn't look like it's going to do it, but hey, you don't know. So be careful. If you're not comfortable, use stop losses. If you're not comfortable, you know, holding it through a longer bear market, then use stop losses. That's what I can read for NEO US dollar. For NEO Bitcoin, this is, I wouldn't touch it. This I would not touch it, because yes, it's crossing bullish, but it only retraced 50%, while most of the market retraced 80 or 90%. So I wouldn't be surprised if this one needed a retracement of 80 or 90% as well. It doesn't mean it has to happen, but because I don't know, I would not touch it. This is not clear. And even if this finishes, you know, crossing bullish, it seems it's going to be a fake cross. Why? Because you see the the moving averages, especially the 50-day moving average, is perfectly downtrending. It's pointing down. They are not crossing. When they cross bullish, look at the difference here. Both moving averages are pointing up. You see how they are uptrending already? There's momentum here for the reversal. There's no momentum in this one. They are still pointing down. This is more likely to be a fake cross, and this it's gonna need to retrace a little bit more. So, but then in the other side, it corrected already more than 50%. So it's not time to go short. You are like in the middle of, you know, in the middle of nowhere. You don't know really if it's gonna go up or down or sideways here. It's not, when you don't have a high probability for a winning trade, you do nothing. You just don't enter. There's a lot of fish in the sea. There's so many more coins. There's so many more charts that are much more easier to trade. This one is not to be traded at the moment. There's nothing clear here. So that's all I can say for Neo Bitcoin. And then this is Cardano US dollar. Cardano US dollar, beautiful cross here, beautiful bullish cross. I would be buying this dip myself. I would, you know, this one is I like this one even a lot more than Neo versus US dollar. This is just looking perfect, like the perfect cross. Both moving averages are trending. It's been going down like you know, slowing down the bear market, forming a rounded bottom, volume increasing. This looks very, very good. So if we go from bottom to top here, where are the retracements? If you want to get a specific, if you don't want to get a specific, then maybe just buy in 3-4 days after this has been going down a couple more days or 3, and then you buy there, because as I said, this is expected to hold it for the swing. And if there's going to be an upswing, it's going to be, you know, 2-3 months holding it on the way up. But if you want to get a specific, the 50%, it's going to be exactly at the 20-day moving average. You can use this Fibonacci yourself, and you will see, you know, the prices. You can set the percentage of the retracement and the price right here next to it. So the 50% retracement, it's for 23 cents. Then the 61.8 is for 20 cents, 0.20, and then 3.4. So, and it would be at the 50-week moving average. But to simplify this, just buy the moving averages. Just buy when it's somewhere near moving average, you just buy it. Now, if you're not going to be comfortable holding, if this goes lower, then have a stop loss. But your stop loss should be, you know, somewhere at the 78.6, a little bit lower, because there's always the chance it'll retrace all the way back down to the 78.6. So you don't want to be stopped out and then watch it go up, you know. So have a little bit of room here. Now, if it gets lower than, let me give you a specific number for the stop loss just here. I mean, if it goes lower than this, I'm gonna call it 15 cents. 15 cents. If it goes lower, it means it's too close from the bottom, and it means the bottom might be broken, and we might do lower lows here. But as I said, I don't find this to be very likely. I mean, I don't think it'll go lower than the 61.8, or, you know, halfway between the 61.8 and the 78.6. So that's this would be my entry points here for Cardano. I'm not interested in Cardano myself, but the chart looks amazing. You know, to buy the dip. And you know how it is, guys. During uptrends, you buy dips. During downtrends, you short bounces, not the other way around. So now it's not time to think about shorting any altcoin that's, you know, that already reversed like this one. Now it's time to buy dips again. Okay, and when it gets to the end of the cycle, then you go back to shorting the bounces when it's downtrending. But right now, this is the beginning of the uptrend, or it seems so. Oh, it seems so very, very, very strongly. Look at this volume. Look at this perfect shape here. This one looks amazing. Now, Cardano versus Bitcoin, exactly the same I just said for Cardano versus the dollar. Exactly the same. If you want to get a specific, use the fib retracement from bottom to top of this last leg. And I would bet for the 50%, which is going to be in between the two moving averages. Let's see the prices here. Let me drag it a little bit. The 50% is going to be for 2,600 Satoshi. And the 61.8 is going to be 23 56 Satoshi. I mean, you can see the prices here. This has so many zeros and so many numbers, so you can pause the video and look at this yourself. And again, I would recommend you to set this Fibonacci retracement thing on your own chart so you can monitor you know, the price movement when I am not here, because then I keep getting messages every 5 minutes. Let me know when it's finished retracing. Let me know when the dip is over. Let me know. No, I don't have to let you know. You guys draw the lines on your own chart and then you monitor yourself and see the numbers. You need to do something on your own, guys. But it looks amazing. I mean, it's forming a rounded bottom here. Moving averages just cross bullish, so it's ideal to buy the dip. And if it was me, I would buy a lot. And of course, I would be careful just in case I'm wrong. But I always did this with cryptos for the past how long it's been now? A year and a half? I don't know exactly. But since the beginning of the bull, since before the beginning of the bull run in 2017, at the end of 2016, that's what I did at the very beginning of the bull cycle, like it's just and now. I loaded it, I bought a bunch, and then I did nothing else. Maybe I increased my position in the next dip, and that's all. I have not been buying on the way up. I have not been doing crazy things. I only buy a lot at the bottom, and then I just run with that, and then I sell after the big crash. When it bounces, I usually sell in the second bounce. You know, all the cryptos have very similar patterns. So this would be, I mean, again, I'm not interested in Cardano myself, but I did that for Bitcoin Cash. I did that for EOS last year when at the beginning. I did that for, I don't know, whatever, for Ethereum. That was, yeah, in 2017. Whatever the coins that I bought, I did that. I bought a lot, like a bunch at the beginning, you know, down here when I could spot the beginning of the bull trend. I bought a lot, and then I just held. And sometimes I increase, especially for Bitcoin Cash, I increase my position in the first dip or in the first and second dip maximum, but then I don't keep buying on the way up. I just sell then as near the top as possible, and then I stay away for the bear market, or I short the bounces if I can, you know, short it versus Bitcoin, because I usually always have Bitcoin and Ethereum anyways. I don't sell everything, so I can, you know, use them to short again or against other cryptos. But basically that's what I do. If I was interested in Cardano, which I'm not, but if I was, one of these coins that I am interested, I would be buying this dip big time. I would be buying a lot. Now be careful. I mean, if it goes the other way, then don't blame me. You know, you need to be responsible. Never invest any more than you're willing to lose. So that's all, guys. I hope it's helpful. Thanks for watching, and I will see you soon. Bye.